please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. I'm Prashant Nair. With me is my colleague Sumaira Abdi. The market on the Nifty is just 10 points away from the day's high. 10,322 is where we're at. The high was 10,332 or so. I mean, actually exactly that. So this is not a bad-looking market at all. And, you know, it's been kind of giving us the signal that it wants to go higher. At least it's not given the signal that it wants to break down or sell off from this morning. It's been, you know, between that 5 to 20 odd point down range for the longest time. Maybe things will change for the better over the next 2 hours of trading before we wrap out today and wrap out the week as well. But that's mid-cap index doing a lot better. I mean, it's been doing a lot better from the morning. I think pharmaceutical index top gainer, no change there. PSU banks, of course, have been not problematic. They've had a big move. I mean, the index was up 5-6% yesterday. They are a little lower today, but that's also picking up. That's also changing at the margin. Sumaira, afternoon.
Hi, Prashant. Good afternoon to you as well. And, you know, Europe is trending actually.
Sensex is in the green now. The Nifty is almost there. Ashwini is with us as always on the top of the show. Ashwini, afternoon. Will it get better in the next 2 hours?
In the last couple of days at 1:30, it's gotten better or worse. So I think it should get better because, like I was saying, that today's tweet is not getting the same sort of reaction. And now PSU banks are coming back very strongly. So the move on financials is now resuming. So, you know, once banks start to charge ahead, then it's very difficult to hold the market lower. And the way Europe, etc., is reacting, and nobody is in a panic mode because this is now an everyday activity. It's losing its emotional appeal. So my sense is that if you buy Nifty, Bank Nifty here, you should end up higher than where we are right now. Maybe not as high as yesterday, but I would think 100, 150 points on Bank Nifty and maybe 30, 40 points on the Nifty should happen from here. As far as individual stocks are concerned, Canara Bank is a buy with a stop of 280, target of 295. BOB is a buy with a stop of 144, target of 156. And NIT Tech is a buy with a stop of 900, target of 925.
So BOB you've got to buy, Canara Bank you've got to buy. So I mean, essentially, are you looking at some of the most Bank of India, the most beaten down basically? Bank of India, for example, is still down 50-60% from the highs.
See, the message that is coming very clearly is that, you know, money is moving towards corporate banks, including PSU banks. So that move is continuing from yesterday. As we speak, Canara Bank is now up 2%. In fact, the bank that is down is IndusInd Bank. So I think last year's skewed action where retail banks kept on making new highs and corporate banks kept on moving lower, that is being corrected. And hence, that's giving strength to the Bank Nifty.
All right, Ashwini, thanks very much for your afternoon trades. Let's also shift focus actually to the global space. So look at the European markets down between quarter to about a half-odd%. Trade war fears are once again back on the table. There is escalation from both sides. Bruno Verstraete, partner at Lakefield Partners, joined us on the telephone line to make sense of this. Hi, Bruno. Good afternoon to you. What's the sense you're getting now with this latest move coming in from President Trump? You know, every time there's an escalation now in this so-called trade war, the market's reaction is getting a little more milder with each time. You think the market has figured that this is, you know, only so much talk and the actual action is very limited?
Well, I think the market is still looking into what implications it will have on which sectors and which companies. So far, it looks as if Europe is kept a bit out of the fire line, let's put it that way, between the U.S. and China, which is clearly the main focus of President Trump at this stage. But it's also unclear yet as to which companies will potentially benefit from all of those moves and repercussions it will have. So I think, for example, U.S. pharma will be punished with tariffs in China. That could be a benefit to the Swiss pharma makers. At this stage, I think the markets are still digesting which total impact it will have. Clearly, it is not good for global trade. That will be the long-term effect. but short term there could be some winners out of this as well. And I think that's what this digestion problem or process is currently doing, and that's why the decline is getting a bit more rational by every announcement.
Bruno, so are the lows in for US markets?
Are
the lows, have you made lows and now things are getting better?
Well, I think in the end, the U.S. is still a net importer from Chinese goods. So whatever happens, I mean, this could be in their benefit and could protect their economy. History has shown that this is not beneficial to the global trade, nor to the profits of the companies in the long run. But in the short run, I think some companies might actually take benefit out of that. Clearly, this is not a good move in the long run. In the short run, it might feel as if this is helping some companies out. And I think that's why every time you see this reversal on the market, because, you know, it is what it is. The big conglomerates will not sell less products in the short run because of it. And I think that's what the market is telling us.
All right, Bruno, thanks very much for stopping by for your quick thoughts. So that's the word on how the global trade fears are panning out. But the countdown has begun for CNBC TV 18's India Business Leader Awards. The flagship event will honor the visionaries behind. Den Networks is a company in focus. They have big plans inside. They've targeted an expansion of their fixed broadband services to 100 cities by 2018, and they hope to enable over 1 crore households with high-speed broadband services by 2020. S.N. Sharma, CEO of the company, now joins in to talk about these plans. Mr. Sharma, good afternoon. Thanks much for speaking with us. First up, how are you planning to fund this entire expansion? How much will it bring in terms of your revenues and so on?
Yeah, good afternoon. Here we are already servicing close to 11.5 million digital subscribers over 13 states. And we have the basic infrastructure in place. Earlier it started with coax wire. Now it is all converted into fiber. 90% of our network is fiberized. And then we have our associates in terms of partners, that is cable operators, who carry our signal to every household. Even 70% of distribution network of the cable operator is also converted into fiber. So net-net, our fiber optic is close to 100 meters away from the digital subscribers that we are servicing today. So my basic infrastructure that I laid for delivering cable, that is video service, is all fiberized and is all ready to take the data services across to the subscriber home. Using the same infrastructure wherein the investments have already been made, there won't be much of investments for delivering data services. At the back end, we are already having an investment since we already have close to 2 lakh broadband subscriber in city of Delhi. We have been in this business for last 3 years. We are servicing 2 lakh broadband subscribers. Now, in the next stage, we are going to roll it out to 100 cities. Out of the 500 cities, we are serving for video business. And
Mr. Sharma, just a quick point. So you're saying that right now you offer broadband services in how many cities? You said as of now
we are operating in main metro of Delhi and 10 small cities of phase 3, that is in North India.
Right, and you want to go to 100.
We want to go, since our video business is already servicing more than 500 cities. We already have the establishment for video business in 500 cities.
You began by saying you got 11.5 million subscribers.
That is digital subscriber, that is video subscriber, cable TV subscriber, yes.
I was looking at the third quarter numbers. At that point, the number was about 7.4 million.
No, that number is the paying subscriber. In terms of PINDAS, overall paying subscriber is 8.5 million. We have the boxes number in terms of 11.5
So the paying subscribers are 7.4, right? I mean, that's the number we should...
Paying is 8.5. 7.5 is in terms of PINDAS because 1 million, because of accounting requirement, we are not counting that 1 million. So, yes, you can say in that sense 7.5.
Okay, fair enough.
And all these exist in 13 different states in 500 cities of the country.
Okay. So, Mr. Sharma, given that this expansion, the requirement of capex is not very high, could you tell us what it will do to your top line, say, over the next 2 years? And the broadband business itself, when are you hoping that on an EBIT level it might turn positive?
No, you see, these 100 cities that will be enabling in next 1 year, next 12 months, we are going to have 600 subscribers, and as of now, we have done our calculation based on 550 rupees ARPU. There will be, and this will require a capex of not more than 30 to 40 crore rupees at my end, and this will be profitable within 2 years of time itself.
Your broadband business, that is?
Yes. Expansion in these 100 cities.
Yes.
Since there is hardly any capex as far as broadband expansion is concerned.
Right. No, but you'll have to put cables, right? I mean, the main cost is the cable cost.
Cable is already put in. That's what I'm trying to explain to deliver. Our video services, that is cable TV services, cables are already there.
No, you don't have to put you don't have to put another cable in the pipe. I mean, the existing one will do.
Yeah, even if it is to be put, that is all covered in the 30-40 crore rupees of capex that I have pointed out.
So 30-40 crore rupee capex will get you 100 cities. I mean, you want to be present in 100, and that capex will do the job.
That is capex at 10. Then my cable partner will be putting him separately, and that at capex he will be able to recover from the subscriber. That's not going to be huge.
So just put this capex in perspective for us. I mean, annually, how much do you spend on capex?
Annually, as of now, cable TV, we are not spending any capex. It's already done. It's now annuity business. The plant is there. The network is there. It's only the subscription level have to be taken up, and the charges with the subscriber have to be realized. And that's all. That's how the investment so far in cable TV business are close to 2,300 crore rupees.
You will need to raise this 40-50 crores, sir?
No, this will be coming from internal accruals.
Okay.
We won't be raising anything. Yeah.
Just one point. You're saying you're assuming an ARPU of 550 rupees a month, right?
That's what we have planned for. Yes.
Okay. So
for a speed delivery of 40 MB to 60 MB speed and data consumption of 50 GB.
Even a couple of months, maybe a year earlier, ARPUs in the business were 700, 800. It's come down to about 600, I think, is what others do. It's continuing to fall. I mean, by the time you start up, because there's so much aggressive competition there, is 550 aggressive, or is it, I mean, if, say, for example, it's not 550, a year later it's 450, I mean, how will the math change for you, if at all?
No, maths won't change for us significantly. Let me also clarify here. Even in our case, we were charging 900 rupees in city of Delhi around 3 years back. Today, our charges are around 600 rupees. But in our plan of these 100 cities, we are dropping out of the main 10 cities. Let me further elaborate a few data points over here for your consumption. Across the country, wired broadband is just reaching 6% of households, whereas wireless, you very well know, is reaching to 450 million subscribers. Wireless through a telephone service provider. And wired through BSNL plus small-time players is reaching to close to 20 million, less than 20 million subscribers. So there is a virgin area. The demand has risen courtesy the warfare between the telcos. The demand is picking up. That the requirement of speed is also going up in all phase 3, phase 4 cities where there is hardly any broadband service provider. If at all there is somebody who is not able to give a speed of more than 2-3 MB, whereas our starting point will be 20 MB onwards.
Mr. Sharma,
so I don't see any stress on the ARPUs that we have calculated.
Okay, fair enough. Mr. Sharma, we'll leave it there. Thank you very much. Good luck with your plans. And thanks for speaking with us once again. 20 points lower. So, I mean, 10 minutes back, it was looking like the Nifty would break into the green. But now there is another leg down, which seems to be coming in. 20 lower, 10,305 is where the Nifty is. As you can see, that sharp thing. I think that should be about a 20-minute odd candle on the Nifty. We take a very quick break. We will come back with more on markets and more opinion in just a bit. The market's not continuing to sell off, but from being absolutely flat and turning green, we are down 16 points. Before we took the break, we were down 20, 10,308. Let's listen to some market opinion now. S. Krishna Kumar of Sundaram Mutual Fund says that valuations for the market have become much more reasonable now with right now. And this provides a good entry opportunity in the small and mid-cap space. Listen in.
I think in the last 4 to 5 months, we have seen a fair bit of softness in the mid-cap and small-cap space. And we have seen valuations becoming a lot more reasonable compared to where we were trading in November, December of last calendar. While valuations have corrected with prices, we have seen on the other side the economic fundamentals have been getting far better. The corporate earnings has been recovering pretty nicely, and leading that has been several of the mid caps and small caps which have been doing well consistently for some time over the last 1 year. What we are seeing clearly is sharp rebound in terms of earnings growth in most of the domestic cyclicals, and also some sectors which probably are linked to some amount of a global recovery, say IT, etc. So overall, there has been a kind of a good patch where most of the stocks again are back to very reasonable valuations at this point in time. And provide a good entry opportunity with the medium term in perspective in mind.